What's going on, everybody? It's Late Samar here, aka Minty Pips, and today we're going to be going over a strategy that's crucial to Minty Pips Academy course. And I'm just going to be basically showing you how I trade, what I do when I trade, and what exactly Minty Pips Academy is going to cover. All right, so as you can see here, I have my chart USD JPY. And what we're going to be doing is going over the fundamentals of how I trade. You know, I've been trading for the last 9 years. I've been trading since 2011. It's 2020 right now. And so I've learned a thing or two over the years. And what I'm going to do is basically showing you how exactly I market my chart. So the first thing that we want to go over is the foundation. You know, the foundation of my strategy is just basically going off of support and resistance. Okay, and support and resistance is the foundation of my strategy. And then what we do is we go into convergence, right? And we find multiple areas for entries. So my style of trading is based off support and resistance, but it's also using convergence to allow you to find the best possible entry. So, you know, and then we're going to have the supply and demand zones. You know, we're going to be going over trend lines. We're going to be going over Fibonacci retracements and also harmonics. So, all right, so what we have here is USD Japanese yen. And what I do is I start off on the daily chart. And when I'm on the daily chart, what I want to do is get on the line chart and mark up my support and resistance level. So I actually color code them so I can keep an eye out on key levels, especially on the daily. So on the daily chart, I have my line as red. And so what I do is I look at the past data and I look to the left. So I'm not looking at all this extra stuff up here. I'm looking for where the market is currently at. And that is what's important and that's what matters. So I'm just going to go ahead and draw a few. And I like to find some multiple areas. So, you know, this point right here is a resistance. This point there is a support, right? So this is going to give me a good level. You know, this is also a really good level here. We got 1, 2, 3, and 4. Okay, and then we can also put another daily support resistance level, or you could call them indecision levels, which means that the market is indecisive around this area, and it usually either breaks support or resistance. So just something that I'm seeing off the bat. And you know, what we want to see on this pair is to see where exactly it's going, right? So, you know, this is on the daily chart. So what I want to do is just pay attention on where the market is currently at. I see we got a bounce right there, and it looks like the market could potentially bounce right where it's at. So the daily chart is on the line charts. Once you do that, you go down to the 4-hour chart. Now on the 4-hour chart, you're going to notice a lot more details when it comes to indecision levels like support and resistance. So this is going to be my H4 resistance and support level, or indecision level, right? So there's going to be one right there. I see another one right here. And you guys see how I'm following along. And I actually trade more so on the 4-hour chart just because we're going to have a better chance of getting an entry. The daily chart, if you do come close to daily levels, is also going to be really good levels. So I really like to trade off the daily. I'll look for good trades on the 4-hour, and then I'll rarely use the 1-hour. Only reason being is because on the 1-hour chart, you know, there's so many levels that could be used that, you know, you want to make sure that you're able to catch it all the way. Okay, so once I've done that on the 4-hour, we go down to the 1-hour, and on the 1-hour we go to the candles. So on the candles, we look for indecision levels. So I'm going to go ahead and mark this up. So I like to go by the wick, and then I'm going to go ahead and color code this as blue, right? So we're going to go by the wick. And then I also see another level right here. This is where the market closed on Friday, and it looks to be a really nice support resistance level. So we had our entry on the 4-hour. We had another retest entry on the daily, and then we had another entry again on the hour. So these are some really good signs that you know, that this market is potentially setting up for a buy. Okay. Another thing that I like to use is trend lines. When I'm using my trend lines, it's good support and resistance. That's essentially what trend lines are. So we do have a trend line that still needs to be broken. And when we're looking at trend lines, you know, there's many different ways to mark it up. But what most traders are looking for is they're looking for areas of confluence or convergence where you want to be able to find multiple key indications that the market is going to go one way or the other. So once I've done my trend lines, my support and resistance levels, the next thing I do is I go into my supply and demand zone. So I've actually been looking at UJ for a while, and you know, I've been anticipating for it to come down right around this 104, 450 level. Okay, and sure enough, it did. I've been calling it since the market was up here at this supply demand zone, or this resistance zone, or whatever you want to call it. However way you want to refer to it, resistance level, supply demand zone, resistance zone, expensive zone. There's many different terms for it. However way you want to look at it, you know, I've been calling it to come down. Reason being was I see a harmonic pattern forming on the daily chart. So with that being said, you know, we go into play of harmonics and Fibonacci. So when you draw from your swing low to your swing high on the daily chart, you're actually going to notice that the market came down, hit the 61.8, retraced. Okay, so it came down, hit the 61.8. It also hit a daily support resistance level or indecision level. So an indecision level, like I said, it goes between support and resistance. So this is a part of the market where it goes either way, or it doesn't, it's indecisive on what it wants to do. So when we have something like this, when we have a 61.8 retracement, when we have a 4-hour support resistance level, a daily support resistance level, and then a retrace, we can anticipate that the X and the A has been formed. So that means that's X, and then the A and the B has been formed. C is that retracement, and then D will be a pullback back down to either the 88.6 level when we draw from swing low to swing high, or the 0 level. And so what it looks like it did was it came down to the 88.6, broke it, but looks like it hit the zone and then went back up. So it didn't quite make a full retracement, but something that I look for is that it tapped a really low supply demand zone. So something that I'm looking for, there's going to be a lot of liquidity here. All right, so when you put that all into consideration, now is the time to where you start to look for an entry, right? So when you put all of this into play, when you play in the harmonics, when you play in the support and resistance, when you play in the supply and demand zones and the trend lines, now it's up to you to decide where you want to find your entry. So when I'm looking at something like this, you know, the red daily levels are going to be really important to me. So notice on this pair, the market came down, broke through, hit the daily level as a resistance, but then broke back through and then tapped it as a support. This would have been your key level of entry, right? This should have been your key level of entry. Now all we need to see happen is a break of this next daily level, okay? So this is something that I would look out for when trading. Now, the thing about this pair is it is currently still in a downtrend, right? So it's going to be very hard to anticipate a breakout, but when you put in all the things together, you can have a better advantage when it comes to looking for an entry for reversal. There's two ways to make money. You either trade the continuation trade or you catch a reversal. So when you're looking about this, you can find some really good reversals when it comes with harmonic patterns. Not all harmonic patterns are guaranteed, but they do give you a better understanding of where the market is going to be doing. Even if it's still in a downtrend, we can still catch a move to the upside while still it being in a downtrend. So in this example, we would draw it from C to D, where we had our harmonic pattern. So we had X, A, B, and then C to D is always going to be its own Fibonacci retracement. Now, with the fibs, when I draw out my fibs, I like to see how exactly they play out when it comes to the market structure correlating or having convergence with the Fibonacci level. So what do I mean by that? Okay, notice how when I draw from my high to my low, Coincidentally, the 50 Fibonacci level also lands on one of my daily indecision levels. And then the 38.2, really close to my daily indecision level, right? And then you're gonna have the 23.6, really close to that 4-hour indecision level. So if you look how the market is moving on these Fibonacci levels, it almost looks like it's coming down a pair of stairs, okay, or it's coming down a set of stairs. So with that being said, you can use that as another view of convergence, which gives you a correlating trade. So now that I have all that in the picture, if this is the top, and if this is the bottom, and if this is a harmonic pattern, right? This is all ifs because it's all speculative, right? All of this is speculative. We can decide and whether or not we can catch a move to the upside. Now you're gonna have PRZ zones, or what we have price reversal zones, even though this is still in a downtrend market. So we can still have PRZ zones, whoops, not cones. So we have some PRZ zones at the 38.2, the 50, right? And that stands for price reversal zones, okay? The 61.8, and then the 78.6. These are going to be your key PRZ zones. And so your job as a trader is to figure out which zone is it going to reverse off of, okay? And so that is going to determine your trading strategy, okay? So what we're trying to do here is figure out which part of this harmonic is still valid. It could come to the 38.2 and still drop, right? And still continue its downtrend. But we could see a potential reversal. Now, another thing that I see on this trade is a potential W pattern forming. So we could have, you know, a potential W or a double bottom on the daily. You know, we would come down, have a midway point, double bottom, pull back up to the upside. This is very possible. You know, we are sitting at a very crucial level for USD JPY, and I'm really excited to see how this pair plays out this upcoming week. So when the market opens on Sunday, today's Saturday, so when the market opens up tomorrow at 5 o'clock Eastern time, what we would like to do is see what the market does when it opens. Let's see some price action. I want to see where the market is respecting. Are we going to get a breakout of the trend line? And if so, are we going to get a retest on one of these indecision levels on the support and resistance, right? And I'm going to be looking for the red ones or the green ones, not necessarily the blue ones, just because those are on the hourly chart, but on the daily and the 4-hour, those are going to be a lot more significant. So when it comes down to it, we just have to be patient and see how it plays out. But when you have the chart marked up like this, and you can remove the Fibonacci level, so you can remove all the distractions, you already have the PRZ zones marked up like this. This is how I trade, and this is how I'm able to catch some really beautiful moves. Just like how we caught this move to the downside. You know, it hit one of our supply demand zones. It went down 224 pips. It completed our harmonic pattern anticipation. And you know, when you look at a Fibonacci move, when it peaked up here and you pull back this Fibonacci level, it reversed right around the 78.6, okay? So reversed right around the 78.6. You guys can see that. It came down, came up, almost hit the 78.6, hit the 61.8, and then proceeded to drop. It retested the 61.8 a few times actually before it dropped. So notice how these levels mean a lot. So had you been able to anticipate the 78.6 and the supply and demand zone, you should have had your sell limit right around here, anticipating the market coming down to complete this pattern. So, ladies and gentlemen, this is easily one of the best ways to trade Forex. You know, there's so many opportunities. You can use this strategy on so many pairs. And this is just going to be one of the things that we here at Minty Pips Academy will be covering. And I will see you guys on the next video, hopefully with some more knowledge and free information for everyone to watch. Thank you, everybody, and I'll see you all at the top.